Hey, what's going on, crypto people? It's your boy Crypto Siege with another day in the life, in the crazy life that is cryptocurrency. What is good? What is going on, guys? Everything good? I wanted to shoot this quick video. I'm thinking about changing my name to The Crypto Siege. Yeah, I think I might do that. Change that up. I just got the thumbs up from my better half, so I might gonna change that to The Crypto Siege. But in any case, I wanted to shoot a video for you guys. Watching a couple of things yesterday on YouTube and did my homework and realized that this kind of comparison between Bitcoin and gold has been going on for months now. Makes very good sense, and sure, I may show you a chart or two, but I was really wanting to shoot the video to kind of get across, really in my mind, the bigger view, and that is, how many of us, after paying attention to these charts and, reading, the narrative of some very smart people who understand the charts and history and how it pertains going forward, like how many of us are heeding this advice or wisdom or knowledge, if you will, and doing something about it. Because when you see the charts and you do your own homework, you do your due diligence, it is very obvious to me that this is exactly what institutional money is doing and following and watching and charting, in my opinion. But so anyway, I just wanted to shoot a quick video for you guys, just to kind of get your views on it. I've seen a couple of YouTubers do videos like this before. Data Dash did a video about it as well. Very smart from the TA standpoint. In all things financial, he's a real smart guy. I saw the digital asset investor do a video as well, and here's my thing that I say is that some people subscribe to my channel, however small it is, might not have even heard of Data Dash, might not have heard of the digital asset investor, and vice versa. And so that's why you may see people doing videos on this kind of the same news, if you will, because just some subscribers subscribe to others, and obviously don't subscribe to others as well. So this quick video, guys, just again, this is for me, this is my thinking on it, because it's one thing to be kind of informed or to have knowledge. It's another thing to kind of put it to work, put it to use, and understand really the truly big picture. Again, like I said, I really felt as though this is what institutional money is aware of, has been aware of, and as going forward with this knowledge. I think the biggest difference today is that when this happened with gold back in the day, with the advent, or the ETF futures, or the futures and then the ETFs, is that it wasn't a new asset class. Gold was, right? It wasn't a new asset class when they started this. It'd been mixed in with others, and I guess you would probably say commodities. It wasn't a new asset class, and I think that Bitcoin and cryptocurrencies is a new asset class, and what that does is institutional money is not in yet. And so when you look at the charts and you can obviously see what's coming, you have to realize that I think, first of all, that the bear markets will be smaller as compared to what happened with gold. They won't be as long. And I think that the bull market will be significantly more bullish when it comes to Bitcoin and cryptocurrencies. So anyway, I'm going to just read a little bit of to you guys. Tell me what you think in the comments. Would definitely love to hear your thoughts. It says analysis: uncanny correlation between the long-term Bitcoin and gold charts. So uncanny pattern resemblance. Nick Chong here is the author. Since Bitcoin's inception a decade ago, many have likened this decentralized digital asset to gold, with some dubbing Satoshi's brainchild as a form of digital gold. This connection may be drawn due to the fact that the two individual assets are both stores of values, divisible, durable, and secure. Although there are similarities between the two assets that are as clear as day, as recently pointed by Nunya Business, very smart person, discovered this person on Twitter. a lesser known cryptocurrency proponent, there might be an uncanny line that can be drawn between the price action of gold and its digital counterpart. And here's the chart. Here's the chart that a lot of people have pointed to. And I think this is one from Nunya Business. So BTC Gold versus, this is both log scale, uncanny pattern resemblance between gold's 43 years of chart data and Bitcoin's 9 years. On Thursday, Business took to Twitter to bring up two separate charts, with the first being gold's 43-year price history and Bitcoin's price action throughout the entirety of its 9-year lifespan. Put in the charts, which are logarithmic slant nonlinear side by side, it becomes apparent that there are clear parallels, or as Business puts it, uncanny, even though the two stores of values may be inherently different at their core. As seen in the tweeted image above, the price action of both markets have seen similar bouts of exponential increases and subsequent cooldowns, leading some to ask if Bitcoin is following in the footsteps of gold in some manner. In a tweet posted just days after the original, the user brought up a zoomed-in chart of the two assets to back up the belief that they could be correlated. According to the tweet, if Bitcoin is really following gold's path, that could mean that the price of the foremost crypto asset could move under the ever so important 5,800 support level over the next few months, and happen literally just like that. So we just saw that, right? It moved under 5,800 just a couple of days ago. Very, very interesting stuff there. So obviously this person is very smart, in my opinion. Nunya Business. However, as covered by the Ethereum World News, Gaber Gerbox, the director of digital asset strategy at Van Eck, slant MVIS, claims that Bitcoin could be worth upwards of 20,000 if it can succeed in a role as a primary form of digital gold. Gerbox explained his prediction, stating, investors do refer to Bitcoin as a form of digital gold, and gold today has around 7 trillion outstanding. If you take, say, 5 to 10%, I'll let everyone do the math. Bitcoin has upside. Bitcoin is used as digital gold today. It's a de-risk asset. It's a de-risk asset. And I think that's kind of the interesting thing. When I hear people talk about Bitcoin, as this payment thing, that might be an idea. That might be an initial the initial intent of it, obviously not to have to deal with banks and these type of things. But in my opinion, the way I see it, right, I'm just a guy here on YouTube. I just think that Bitcoin, its store of value is going to be the thing above and beyond all things. I personally think that the folks down at Bitcoin, the core people there, could have scaled it, could have made it faster, could have made it cheaper years ago, without question. And I just think that at its current rate of what it's doing, it's just more profitable for them to not do so. And they may look to do things going forward with, Lightning Network, RSK, and things like that. But I think at that point, in terms of a payments thing, it's going to be behind others. It's going to be behind others. I think that, look, there's a PayPal, and there's a Western Union. There's a Western Union, and there's a Google Pay. There's a Google Pay, and there's a Facebook thing, right? There's all right. There's a first, second, third, fourth, fifth, sixth, to 10th thing, and I think Bitcoin is going to fall into that as well. I think the thing that Bitcoin has above and beyond all things is the scarcity. It's the supply and demand, and I think that institutional money and old money understand that and will use that as the thing to grow it, because there's just something about knowing there's only a limited supply of this certain thing that everybody wants to get. And never forget that old money controls the narrative, they control media, and they will continue to spin that. They'll continue to put that narrative out about the lack of supply, the scarcity, the limited only 21 million Bitcoin will ever be created type of scenario, they will continue to put that out to the masses. And that will be the thing. Because it's going to be a point in time, I believe, in the next 5 years, not just Bitcoin, but Litecoin, Ethereum, XRP, Bitcoin Cash, Cardano. It's just going to be a few, right? That is going to be more than just Bitcoin that the retail world will look to accept for payment, especially Litecoin, is my opinion, because it is so very, very similar to the Bitcoin. So the Bitcoin in terms of this payment thing, you know, as far as that being the thing that's going to drive it, I don't think so. I think the supply and demand is going to be the main thing out there. And institutional and old money will push that. I think that, eventually it's going to get its six-figure price. Without question, that's going to happen. But in terms of the average Joe or Jane making their biggest gains, it will be in my humble opinion, in the other crypto assets out there, the other digital assets that are out there, right? That will be the home run, if you will, for everyone else. But in the end, together, not just Bitcoin, but together, all the digital assets, make up an asset class. And sure, we're going to, over the years, we're going to go from 2,000 to 1,500, from 1,500 to 1,000, from 1,000 to 500, and so on and so on, until about the top 20 to 30, without question. That has to happen, right? Because it's just a lot of junk out there. But it will create an asset class. It has become an asset class. That is the key for you and I, and that we're able to participate in this asset class before old money, before institutional investors, before the regulators can even figure out what it is the heck that they're doing to regulate it. We already own the asset class. We already own certain digital assets already. Once regulation comes, and once old money and institutional money is done with the institutional investors, then they'll obviously be turning it on to the retail people. But we have these assets way ahead of them. And trust me, when I say that there are going to be so many different products evolved around digital assets, it's going to blow your mind. And we're in a great spot that if you've been in this for a little bit, even if you've just been in it 6 months, you're so way ahead of other people. And if you diversified into the, in my humble opinion, the top 10, top 20, you're good. You're more than good. These prices, however, that is going to be the challenge. I'm not certain that these prices are going to last much past the end of February, in my humble opinion. But anyway, I digress. Let me go back to the importance of this video. That's a very, very smart guy, right? From the Van Eck, talking about it's a de-risk asset in terms of Bitcoin. Crypto Oracle executive, Bitcoin is functionally better than gold. And it's just an executive, right? He has his opinion, just like so many others. But I thought it was interesting that he said that. Postulated price correlation aside, there are many that think that Bitcoin is actually superior to gold, as it has certain functions that make it an appealing investment, while also being functionally better than the yellow metal that humans have come to love over the course of written history. And if I can pull up a chart, I'm going to show you the difference between gold and what it's done since 2011 and Bitcoin and what it has done since 2011. This guy's last name looks like it's Kerner. Bitcoin well positioned to be a store of value competing with gold. He was obviously on CNBC. Gold has emerged as the global store of value and has held that position for literally a couple thousand years. That's an awesome run. So we now have something, Bitcoin, that we think may be functionally much better, much, much better. So we expect it over time, not in a day, not in a week, not even in 5 years. That's the keys. That's the key, guys. And not even in 5 years. One of the reasons why we do this channel is we talk about it's really, really important to look at this asset class long term. One of the big downfalls that we had in the crypto space, unfortunately, was in 2017. We had that crazy run up, and a lot of people got pretty wealthy, pretty well off really, really quick, right? And a lot of people got in these ICOs, and all these stories of people getting this, 50, 60, 70, 80, or even beyond type of X in their investment. Unfortunately, that left this kind of expectation that every single year that's going to happen. And quite honestly, every single year that's something that we don't want to happen. We want to have a stable asset class. Now, that doesn't mean that you don't get the big gains, but that one we had in 2017 was crazy, and then it went back all the way down to what it has been. And long term, that's not certainly something that we're looking for. We want something a little bit more stable. That's why I think 5 years is awesome, and looking at it that way and understanding that year, and this is a once in a lifetime opportunity in the digital asset space, and look in terms of looking at it 5 years from now, not every single day, right? Whereas when Lambo and when Bull Run and these type of things, we got to be really, really careful about that. So not in a day, not in a week, not even 5 years. For some of the people using gold as a store of value to switch to Bitcoin, absolutely. While the crypto asset proponent didn't mention any specific drawbacks of gold or positive aspects of Bitcoin, it could be assumed that he sees Bitcoin's ease of use, immutability, digital nature as the reason why some forward thinkers would see value in the use of Bitcoin. There was a YouTube guy that did a video, I forget his name now, and he talks about how this this kind of sideways movements and the different things here. It started with the when the futures came in for gold, the gold futures, and then the things kind of leveled off, and then the gold ETF is when it allowed it to rise and have that bull run. And the same exact thing happened with Bitcoin in terms of the futures, the reports of the futures, the ports of the futures, to run around in this area, report of the futures came, and then we had that kind of a little dip, right? So with the CBOE and the CMOE, because in essence, what the futures allow you to do is to kind of short it. And so knowing that institutional money understands how that works, right? Just that's the thing to get. Institutional money, professional traders understand how that works and why it works, and they take advantage of it. And so the idea is obviously, to kind of drive people out of the asset class. JP Morgan just recently did that with silver and the things that they were doing. Some people call it manipulation. It might be just how the financial world works. And so you have the sideways, even though they're higher than the lows, until the ETF comes. And when the ETF comes, just like the gold ETF, then that's the bull run that is expected to happen. And this very, very, very much in that same similar fashion. And so that's what we kind of expect. And I think without question, that's exactly what's going to happen going forward. But the thing to realize, I think, is just to understand that is how the game is played. And so the idea is not to just come in space and go to Coinbase and get an account and start purchasing. That's great. That's a great first start. But it's to become educated about what's really, really going on, because the information to get educated is certainly out there. Twitter is awesome, right? I think it's crypto Twitter. You go there and you can follow a lot of smart people, do your own due diligence, and make your own decisions. But the information to get educated is there. And my thing for this video is really not so much about the comparison between Bitcoin and gold, but it's like, what are you doing with the knowledge that you have? Because right now we are without question in a bear market that is about pushing you and I out of the crypto space. That's what it's about. It's about pushing you and I out of the crypto space. You see what I'm saying? That's what it's really about. And my thing is, how are you going to respond to that? Knowing that that's what it's really, really about. And, we can say risk and reward and these type of things. Remember, there's more than just one digital asset out there, right? There's more than just Bitcoin, right? There's there's the greatest digital asset ever created, in my humble opinion, which is XRP. There's Ethereum out there. I did a video yesterday about what's going on in Ethereum and the moves that they're looking to make, right? So just understand that this is a digital asset class, and just like there's gold, silver, copper, palladium, and uranium, right? There's Bitcoin, Ethereum, there's Bitcoin, XRP, Ethereum, EOS, Cardano, Stellar, right? It's an asset class. Now, why this is not coming up, I don't know. But right, just understand that there's an asset class. Let's see him here. Right, so there's an asset class, and you just gotta, just gotta understand that that's what it is. And you take the knowledge, you do your own homework, you do due diligence, and you understand that that is what it is, and you act accordingly, right? It's my mentor used to say, right? You act accordingly. Let me see if I got this to work. Yep, there it is. Right, and so I'm going to show you a little chart here about just a little comparison in terms of this whole store of value, Bitcoin versus gold type of thing, just to kind of give you an idea of what's really going on. And, institutional old money has been playing this game longer than you and I, right? For longer than the majority of us, right? So, they have an advantage, but it doesn't mean that you can't get yourself educated and better prepared and have more knowledge and equip yourself for what is really going on. Let's see if this loads up. I had a great image for you guys, and now I can't get it to pull up. It sucks. But what it essentially said was that since 2011, I don't know why it's not coming up. Since 2011, Bitcoin's rise in price has been 118,000%, and gold is down 33% since 2011. So that's an interesting comparison. Man, I can't find that chart. But anyway, guys, so I just wanted to shoot that quick video. So it's not about, the knowledge and knowing what it is. It's about what you're going to do with the information that you get. And never forget that what's going on right now is old money, institutional money, try to scare you out of your crypto digital assets or prevent you from entering in. That's the deal. And in addition to that, obviously they want to try to get as much of the top 10 to 15 cryptocurrencies as they possibly can at the best prices that they possibly can. If you want to do your homework, you can definitely Google JP Morgan and silver manipulation. You can just Google that, and they'll tell you exactly what they did. It's the way of the world until the regulators want to do something about it. Institutional money is going to continue to do things like that. So just understand that the narrative, the intent right now is to scare you out, have you sell your bags so that they can rack them up. No different than what they did in real estate, no different than what they did during the .com era. So guys, never forget this. Old money doesn't want you to win. Old money doesn't want me to win. They want us to remain a cog in their wheel, in that perpetual thing of trading time for dollars, right? They don't want us to play in the same field as us. And I wanted to read this to you too. Never forget that. They don't want us to play in the same field as they play in. All right? I'm going to read this as I exit this video. But they don't want us to play in the same field where we allow our money to work for us the same way they do, right? The wealthy, ultra rich don't work for their money. They build and create assets that spit off cash, right? And this is what we have an opportunity to do in this cryptocurrency space, right? To have our money work for us. Interesting quote here from a guy named Frederick Hayek. And it's from this, he has this at his cover page, his or her cover page, Nunya Business. I would definitely follow that person on Twitter. Listen to this quote. I don't believe we shall ever have a good money again. This is from 1984. Before we take the thing out of the hands of government, that is, we can't take them violently out of the hands of government, right? All we can do is by some sly, roundabout way, introduce something that they can't stop. That's from Frederick Hayek in 1984. Never forget it, guys. Old money doesn't want you to win. We are in the midst of the greatest transfer of wealth in the history of man. Are you participating? Or are you standing on the sidelines? Here's the thing that I do know. The battle for you has already been fought, and the victory is yours. The question is, will you go get it? I'll talk to you soon, guys. See ya. Bye.